Hi, everyone. I'm Francine from Bloomberg TV, and I'm delighted to welcome Jess Staley, Chief Executive of Barclays. And in this conversation, of course, Jess will talk about the markets, the recovery, and of course, how potentially the world of finance is now fueling innovation, sustainable, and an entrepreneur-led global recovery. So thank you so much for joining us today. Jess, the economy has been suspended for the best part of the last 14 months. What does that mean for the recovery we'll see?
You know, I think it's quite extraordinary how the combination of the government, regulators, private sector businesses have really rallied to face this pandemic, and all the spend data that we see, all of the financial stability from consumers in the UK and US and around the world to small businesses to corporate is really quite something, given the size and scale of this pandemic. So, you know, I've said a while before, I think this will be the biggest GDP growth year in the UK since 1948. We're seeing signs of that now. And so I'm actually quite encouraged as we go to the second half of this year that economic growth is going to be robust, and we're going to come out of this pandemic. And I think the success, particularly here in the UK, around the vaccination rate has just been a real testament to the government putting its shoulders behind addressing this pandemic.
Jess, do you worry that because of the variants, we could be in and out of lockdown for months to come?
You know, so Barclays is sort of a unique place because, you know, with a lockdown, we sort of think that everyone's working from home. We've had close to 20,000 people between the UK and India and elsewhere working. You know, all of our branches are open. All of our call centers have been fully staffed. Our trading desks have about 60 to 70% occupancy. So we have a lot of people coming into work around the world. As I said, I think with the vaccination rate as high as it is now, and the measures that people have taken, while clearly COVID-19, you know, it looks like there's going to be another wave. But hopefully that doesn't translate into hospitalizations or more serious illness. And so I think COVID's around for a while, it looks like. But I also think our ability medically to deal with it is growing at pace.
Jess, a number of banks have warned of a bigger trading revenue drop than expected because of the lack of volatility, of course, that we saw in 2020 because of the pandemic. What does that mean for Barclays?
You know, we had a record first quarter. The strategy of balancing a wholesale bank or an investment bank with a consumer business anchored primarily in the UK and the US, I think, paid off last year. I think it paid off quite strongly in the first quarter. There's been a softening of market volatility, but publicly available information in terms of our business, whether it's advisory or equity capital markets, has been quite robust recently. So we continue to be encouraged about the balance. The balance of our business model, and as we come out of this recovery, and companies are doing better and small businesses are doing better, I think the concern around impairment will come down quite a bit. We have a very large impairment reserve. We were very conservative last year in terms of taking impairment charges. And given what we see right now with the economy, that gives us a lot of cushion.
What do you think the biggest, I guess, legacy of the pandemic is on the banks? Is it that there's some sort of redemption after the 2008 crisis because now banks could be a force for good? Or is it the fact that more people will be working from home because actually it's shown that big banks can be flexible with their staff?
So one, I do think it's extraordinary how the banking industry has performed during this pandemic, and that we could enable 50,000 people to work from their kitchen tables is a real testament to our teams in technology and operations. But to your point, yeah, I think 12 years ago the banks were seen as a catalyst to an enormous economic crisis, which millions and millions suffered from. And so hopefully it is for the banking industry, or for us, it's encouraging. I do think, as you sort of suggest, that we will be an agent to enable the recovery this time around. The level of engagement with the Bank of England, with the PRA, with the FCA, with Her Majesty's Treasury, with the Fed, is just, it's at a whole nother level from where it was in the last crisis. And given that we have the financial resiliency that we have, we closed the end of last year at the highest capital level in the history of Barclays. That allows us to stand by our consumers and our clients in a way that, hopefully we are deemed as someone who's helping the economy and business and consumers get through the pandemic.
Have you had any conversations with the Bank of England about possible resumption of dividends or, share buybacks?
So we announced earlier this year a return to paying a dividend. We executed a £700 million stock buyback program. So we've already started that. And clearly, we recognize that, one of our obligations is to return excess capital to our shareholders, and we fully intend to do that.
Just going back to working from home, how do you see that developing? Are what does it mean for your real estate? Do you see bankers actually hot desking? Like, how much of a difference has it made to how you view your staff and where you want them to be?
So today I'm sitting in the office and we have an executive committee meeting right after my call with you. And pretty much everyone's going to be in and sitting around a table, which I think is a very important dynamic. So one of the things that's interesting, we went back and looked at what were our employees actually doing pre-pandemic. And I think businesses were already moving down the pathway to having flexible work hours. It's very important that we let a single parent leave on a Tuesday afternoon at 2 o'clock to take a son or daughter to a doctor or to a sporting event. That flexible working, I think, was already building up prior to the pandemic, and obviously the pandemic has accelerated a lot. So I think people will be flexible. I would be surprised if most people are in more than 4 days a week. But one of the challenges of the technology era is you can look at your iPhone at 10:30 at night and start texting away. So I think technology has actually increased the working hours, although maybe less so in the office.
Again, how does it change? So first of all, is it harder, is your biggest challenge now to either retain talent or actually hire talent? How, hot is the market for traders right now? And do they want that flexibility, or is it about pay?
No, we're back into one of those phases of the war for talent. So we've done a lot of recruiting. I think quite well for Barclays. I think the financial position of the bank, what we're doing in terms of gaining market share now, 4 years in a row. I think morale is very high. We had 3 priorities going into this crisis. One, preserve profitability. So we've been profitable every quarter since the pandemic hit. And as I said, have done lots to build up our capital base. Secondly, was doing the right thing for consumers. So We waived last year over 100 million pounds of overdraft interest for vulnerable customers and small businesses. We created a 100 million pound charity that we distributed last year to try to help people deal with COVID-19. And then thirdly was to protect our employees. And we essentially secured the employment for 85,000 people around the world. And even just today, as we speak, in India, we've extended our financial safety net so that we are, we've actually set up an entire group to help parents and and relatives of our employees to get them into hospitals in India. So I think we're giving a commitment to our employees, a commitment to our customers, and we're preserving the financial integrity of the bank.
Could you do more on costs?
We want to invest. One of the things, Francine, that we want to pivot, and we're trying to do this actually. 2020 was the first year where we had no restructuring costs. And we're not going to have any restructuring costs this year. What we want to do is to go back into the normal, run a going concern business, which is to watch your profitability, but use the investable assets that you've got in order to grow the business. And so we are keenly focused on growing our revenue as a driver to improvements in profitability.
Would you ever just consider actually selling some of your real estate, like office buildings, because of the way we work post-pandemic?
I think there will be, a rationalization of our real estate footprint. But I would say it's more normal course. So no, we don't have plans to close full offices and tell people to work from home. No, we want people to come into the office.
What's your take on the City of London 6 months after Brexit?
I think the City of London has done a remarkable job. I think I think the banks have, again, been very constructive. I think it has increased the dialogue with government in a very positive way. And I, go back, you can walk on a trading floor of the investment bank. But what I find the most energizing is to go to the local branch where I live in London and to see the dedication of the people behind the counters and engaging with walk-in customers day in and day out. And they've been magnificent. Banks have not closed. They stayed open. And they've done their service to the communities where we live. And so I'm pretty encouraged by where London is, and London will be fine.
How tough has it been actually for small businesses, for entrepreneurs? Do you see, is it trends basically that have just been accelerated because of the pandemic, or because of the pandemic we'll see businesses actually fail that shouldn't have had we not had COVID-19?
I think it's been fascinating, Francine, to watch that. Normally, as you go into a recession, the average consumer or small business will, borrow a little bit more money, will use a little bit of their cash to try to maintain a lifestyle or to keep investing in their business. This time around, the reaction to the pandemic was fear. And what small businesses and consumers did is they watched their balance sheet as opposed to their income statement. So if you look at Barclays, for instance, borrowing, particularly on unsecured consumer loans, i.e. Credit cards, went down significantly. Deposits went up dramatically. So everyone focused on their balance sheet and giving themselves the financial resiliency to deal with the pandemic. That, on top of the support of the government, had a big influence. But also, we should not make the global capital markets. What they've done is extraordinary. The amount of debt and equity that we've raised globally in the capital markets for small businesses, mid corporates, and large corporate has just been quite something. So I think it's remarkable. I don't think any of us would have predicted how healthy businesses would be at this point in the game, and that speaks well for the latter half of this year.
Jess Staley, thank you so much for talking to us today.
Thanks, Francine.